Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm here today with Kenneth Lamont, passive funds analyst for Morningstar. Hello, Kenneth.
Hello, Emma.
So we heard recently at the Morningstar Investment Conference from our colleague who was telling us about the opportunities within the agriculture sector because of changing diets across the world. Now, he was talking about equity opportunities, and there are a number of actively managed funds in this sector, such as ones from Barings and JP Morgan, that give investors exposure to this theme through equities that are related to agriculture. But if you want the underlying commodities, you really do have to go to passive funds, don't you? So how do ETFs offer investors exposure to commodities?
Well, as you mentioned, there are logistical problems with trading directly in the underlying commodity. The fund itself can't very well store 1,000 tons of grain and trade this on a day-to-day basis. So in order to gain the underlying exposure, the fund trades in the highly liquid futures market, and they roll these to maintain exposure through time.
And if an investor has decided that they think that this is a great growth opportunity for them, what is the most popular or the best ETF for them?
Well, currently the most popular is the ETF Securities Agriculture ETC product with a total holding cost of 99 basis points, which still comes well under many of the active managed alternatives.
And what does it hold? When you say agriculture, what are you really getting exposure to?
Well, it's a broad basket of different underlying commodities. So this may be soybeans or this may be corn.
And what else is there out there? Because that's just one ETF.
Well, another very interesting alternative is the RBS RISI Agriculture ETC, which has a slightly more complex exposure.
And what's the cost of that? And what are you getting exposure to compared to the other one with that ETF?
The cost is 85 basis points, and it gives a slightly different, it gives a similar broad basket exposure. However, it protects investors against movements in the futures markets.
And of course, we've talked there about getting exposure to the underlying commodities, to these soft comms as they're known. But you can take a passive approach to what many active managers are doing, and that's looking at equities that are related to these agricultural commodities and investing in them.
Absolutely, absolutely. The most popular of these is the iShares Agribusiness ETF, which charges 55 basis points. It gives you a cap-weighted exposure to around the 70 largest equities or businesses involved in the agriculture business globally.
And this could be anything from, the company that harvests to the company that packages anything and everything that comes out of the ground.
Absolutely, and many companies span the full chain of production.
Kenneth, thank you very much.
Thank you, Emma.
This is Emma Wall from Morningstar. Thank you for watching.